and I'm the Chief Market Analyst here at Markets.com. Look, today's Friday. It's the end of the week. We had a busy one. We had four central banks delivering their interest rate decisions. It was quite a volatile week. There's a lot of things happening from the economic side, on the business side, and the political side. So, and I think we're not done. We're not really done for the year. I think that the upcoming weeks are going to be even more interesting in my opinion, so stick around. We'll talk about all that, and hopefully you'll enjoy the session. I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Look, today is a beautiful day. I hope it is for you. We had a fantastic week in my opinion in terms of economic data events, in terms of political stuff, and in terms of business as well, but which I want to pick up a little bit here. We'll still look at our usual indices, commodities, cryptos, and currencies, or should I say actually indices, currencies, commodities, and crypto. This way, that's the sequence. But yeah, look, ladies and gentlemen, thank you very much for joining in this week. I hope you will enjoy next week as well. But just checking out this new little layout thing that kind of YouTube decided to release right now, the new little update this morning. I'm seeing this one. So yeah, I mean, unfortunately I cannot see how many people are actually participating right now, how many are watching, but look, hopefully somebody's watching right now, so let me know in the comments if you are participating. First of all, I'll put my usual good morning in the chat room. Good morning, everyone. Yep, there we go, boom. I hope you can hear me and see me well. Like I said, there's this little new thing layout that's coming, that's showing up right now on my YouTube studio. But look, ladies and gentlemen, I hope, like I said, I hope this week was a fantastic one for you. We had like some major events. I'll talk about those in a bit. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I'm going to just click around through this new thing here that that I have. Like I said, this new studio layout that kind of is now getting introduced. Yeah, I can see dual stream. Okay, right. Okay. I'm assuming that this is, like I said, it will find its use here. Just need to kind of get used to it in a way. But okay, look. Also, before we go any further, let's quickly have a mention of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's jump into the economic calendar, but let me just refresh this one for a little bit. And just to kind of, let's go very quickly through what we got, from the beginning of this week and what to expect today as well. Now, in terms of economic data, this week we kicked off with Tankan Large Manufacturers Index from Japan. For some reason I don't see any data here. I don't know, like maybe it needs to refresh. It needs to be refreshed a little bit more, but still nothing. Anyway, retail sales came out from China. We saw those. Oh no, I'm looking at the wrong date. Honestly, I'm already living in the future. No, Tankan, that's on next week. That's on Monday. Oof, yes, you need to get a grip here. Crazy morning that I had in a way, but okay, it's not, nobody's kind of, it's my problem in a way. It's like not your problem. But look, Japan GDP growth rate final came out. It was a little bit of a disappointment. Here you can see here the Q-on-Q final figure. A trade balance, Chinese trade balance was a spectacular one. It showed up. Most likely the next one will be not as impressive as this one, but it's you go in these cycles. Then we had Tuesday. Tuesday kicked off with RBA interest rate decision, where the bank kind of delivered their last rate decision for this year. It came out at 3.6, the same as previous, as expected, to be honest. So we saw Australian dollar kind of somewhat strengthening against some of its major counterparts, and I think that the bank will remain kind of careful in terms of what to do next, because I think that they're at a good level. Everybody's now going to slowly start worrying about inflation, actually. So yeah, this is something that I'll pick up in a bit as well. But the bank kept interest rates at 3.6. Look, I think that the Australian dollar right now is enjoying the moment, also given the fact that there is still a risk-on environment. Germany trade balance came out, so a little bit better here than the forecast and the previous. That's fine. JOLTS. Now, this is what also was driving the market to the upside. JOLTS job openings were seen on the higher side, so in a way, kind of a good thing, right? But again, we'll see if that doesn't change very quickly, because next week we're gonna have NFPs. I'll pick up on that in a bit as well. Mainland China inflation, yes, higher. So in a way, showing growth a little bit. So maybe this is what the market kind of enjoyed this week as well. That China showed growth. That's why we're seeing also copper exploding, up in a way. And this is all, like I said, this is all kind of piling it all into this market positivity. But again, not everything is gold that shines, right? It can be silver. Also, we'll pick up on that. Going further, yes, employment here, employment change, employment cost, nothing major. Canada, of course. BOC, how could I miss that? So the bank came out with the 20 with no action, the same rate as previous and as forecasted. So I think, like I said, everybody's taking a wait and see approach in a way. Everybody's allowing the Fed to make some moves, and then to see what's going to happen next. And speaking of the devil, the Federal Reserve came out with a 25 basis point cut, which as expected, but they signaled basically that maybe we're not going to get as much cuts as as maybe initially thought in 2026, which is fine, to be honest. Yes, we know who wants still more lower rates, but he cannot get everything what he wants. Well, or at least we think so. So yes, we got the rate cut, and looking at the FedWatch tool right now, let me just update this. So January, where's that? January, we're expecting the rates to remain the same with no cut. We're expecting no cut in January. I think that what's going to happen here is that, because we know that that Jerome Powell is leaving in May, so his last kind of appearance here will be on the 29th of April. So we are kind of pricing in a little cut here. Maybe he's just gonna, here you go, right? Here you go. This is like my farewell gift to you. And I think maybe that's why we're gonna get one cut. He doesn't want to overdo it. He doesn't want to do like maybe two cuts before he leaves. I think one cut is enough. It's like a gesture of goodwill or something. But because again, we understand that the market is worried about inflation, and during the press conference we understood that they are worried about inflation as well. And I mean the Fed. And I said it before and I'll say it again. I do believe in stagflation at one point. I will be that awkward person who will continue saying that, but I'll take the hit. And I do believe that stagflation could be an issue later on, not now, later on, where basically we will have low growth, higher inflation, and high unemployment. Labor market right now is an issue, in my opinion, and I think that this is what Jerome Powell also kind of said. He's also worried in the future that yes, higher prices are expected because of tariffs and everything, so tariff effects. And you look, I mean, tariffs started kicking in from April this year. I said it before, again, also that it takes people around a year to realize that there is a problem. So for a year, up to, let's say, December, we're not seeing, major effect because, well, the kind of the retailers, some importers are taking the hit in a way. Maybe they were asked to do so, maybe not. I don't know, but it seems, or at least it seems like they were asked, hey guys, take a hit. We'll give you like a little discount on capital gains or something, and that's the incentive in a way. So look, for now, like I said, I think that the tariff issue will come up. And like I said, it's just rational expectations in economics that it takes you like around like a year or something, for people to kind of realize that there is a problem. So long story short, and I think that this is what the Fed is also worried about, and that's why he's not in a rush with those cuts. By the end of the year of 2026, currently we're expecting 2 cuts only. So basically, 1 cut in April and 1 cut maybe, I don't know, in September. Let's check it out. July for sure not. It's like a 50-50 thing here between these two, but yeah, the September time, I think that's when we could get a cut. So equally spread out. Anyway, for now we're gonna deal with this later. We're gonna deal with the interest rates next year. For now, I think everybody will forget about the Fed a little bit. I mean, apart from who's gonna be the next Fed chair, who's gonna replace Fed Powell. And at the moment, of course, everybody's like, oh, it's going to be Kevin Hassett, and because he was kind of nominated by Trump, but then now he's saying, the U.S. leader is saying that, oh, maybe there's another one. I don't know. Like, I mean, maybe we're seeing a show of Apprentice here, and like we don't know yet. So, okay, well, that's the world we live in right now. Okay, look, ladies and gentlemen, let's have a look in terms of what else. So yeah, Wednesday we had that. We had the Federal Reserve. Thursday, yesterday, we had the S&P interest rate decision, where yeah, I talked about this already several times, and I said to you that, look, the S&P, the Swiss National Bank, these guys are not going to do anything with the rates. I think we have stepped into the new period where zero is going to stay for a long time. A year, two, something tells me like that, because look at this. When we hit the zero back in 2011 here, we only climbed out of it in 2014. I mean, and then we dropped the rate to, all the way to minus 0.75. And that was back in 2015. And we stuck around here until 2022. So for 7 years, just for 7 years, honestly, so that's what I'm saying. So don't be surprised if the zero now is going to drag on for at least, I don't know, for a couple of years maybe, or something like that, unless something really changes or something. But that's the S&P, it's like, that's the bank whose currency is seen as a safe haven. You have your BOJs, you have your S&Bs. Look, okay, that's the situation here with the Swiss National Bank. Initial and continuous jobless claim. Initial jobless claims here came out on the higher side. Look at this. This is like a bummer here, I would say. Continuing jobless claims, the lower. Okay, interesting. So a little bit of a mixed session here. And today, look, we had the trade balance from the UK. Bummer. Wow, wow, that was like a big number, a big deviation from the previous number. GDP in negative territory again. The month on month. I'm talking about the month on month. There we go. Right. Year on year, still the same as previous. Right. Okay. And then in terms of other data for today, we have a few, speeches from a few Fed representatives here. and Canada building permits. Look, I think today it's not going to be, let's say, economics that's going to drive, or economic data that's going to drive the market action. It's going to be more politics, and we're stepping into weekend. Normally, all the politics gets sorted during the weekend in order not to disrupt the markets too much, or not to send like some sort of major shock waves. Is like you normally, you go into the weekend, you deliver some sort of like crazy news, like, oh, we're gonna like bomb this guy, this country, that country, or something, and then oh, the market will, will have its moves on Monday, but at least we have a little bit of time so that all the people would start talking on TV and like, oh no, actually, it's okay, it's fine. So and this way, you calm down the market. So yeah, like I said, it's a crazy world that we're living in right now. We're seeing the U.S. willing to invade another country. Just one of the regular things that they do in a way. So for some, it's you have this world where when one country gets accused for invading, but the other country can do whatever they want. So it's like, yeah, that's it's an interesting, like I said, an interesting hypocritical world that we live in. So yeah, of course, and it's just what justification you give to the public eye in a way, like who has a better marketing team, which country has a better marketing team. So it determines that. So that's how you shape the public opinion. Anyway, long story short, for now, yes. Looking at indices, let's jump into those, right? Indices, for now, we're seeing an interesting picture here. We're seeing Nikkei rebounding nicely from this little short-term upside support line. And yeah, look, what can I say? I mean, everything seems to be somewhat on the positive side. The Nikkei is closed right now. We're done with this week for Japan, and yep, it's gonna open up now on Monday. Logical. I'm not not saying something new here, but certainly yes, it's gonna be an interesting one to see where it's gonna go, because look, a lot of things we'll see today. I think a lot of movement we'll see today because, for example, Shanghai Composite here as well. This one is. This one is also closed, but it closed in somewhat positive territory today. However, for the week, we're seeing a little bit of negativity. And I talked about this with you last time, and I said, keep your eyes on this highlighted zone. This is my little barrier from where I will consider the move higher. So if we can get this breakout above this area, then great, more buyers could join in here. So, but in a way, if you look at the weekly, you can see that this is holding up nicely. This formation looks like more like a bearish flag. However, a confirmation break below the 3,816 territory is required. This way, a forthcoming lower low will be confirmed. So, for now, I think, yes, it looks somewhat positive in a way at this point, but but maybe maybe we've confirmed here a lower high. If that's the case, let's see if we can go for a lower low. But with Nikkei, for example, the way Nikkei shaped up this week, it also, it ended in positive territory, unlike Shanghai Composite. But the fact that it struggled to overcome last week's high, or should I say, not struggle to overcome, but struggle to stay above, remain above last week's high, which is roughly around this 51,028 zone. Or in general with the 51,000 zone, we struggle to remain above it. So we're now seeing a hold up, and it kind of raises a few questions here and there. Also, given that we're seeing some cracks in the tech world, which I'll jump in a bit. Dow, look at this animal, honestly, like boom to the upside. Yesterday, everybody was jumping. Like yesterday was very interesting. Look at this. I mean, I'll show you how the performance looked. Dow gaining massively. Nasdaq's in the red. Nasdaq in the reds. S&P as always somewhere in the middle, and Russell was kind of okay, right? So the relationship here was actually very interesting. So basically what it means that the market still wants to be positive, still is the risk, it is still in risk on environment, but everybody's kind of getting worried about technology and the whole AI spending, which to be honest I really support in a way, like, because I said it before several times and I'll say it again that um, this whole AI spending is really off the charts, honestly. And this is like, it's not justified. And we're starting to see that. Look, Wednesday, we had Oracle after hours delivering their earnings. They came out, Oracle came out with some kind of crappy numbers, I would say, because look, the company, where's that company? ORCL. Uh, they had a massive plunge of stock, their stock here, and just to give you a little bit of a brief like explanation what happened here. Now, these guys reported bad revenue. Let me just where's the article that I was looking at. So these guys reported bad revenue, and it's where's that? Company missed so they missed their quarterly revenue expectations. There we go. But what's the more interesting part in all this is that they missed their revenue expectations, but they lifted their capital expenditure forecast from 35 billion to 50 billion. And what's interesting is that if you put it in other numbers here, that it's 75. This increased spending is 75% of their expected revenue for this year. So but whereas normally you would, if you're doing capex, I mean, it should be like up to maybe 20% of your revenue. But you're going 75%. It's in a way, it's like you're going all in. It's like almost. It's like a card game. Not naming the card game, but you're going all in, almost, and you're betting on this, but you don't have clear results. You think that you're gonna boost your, maybe this way you're gonna show the positivity or something. You're bluffing. You're bluffing, and but again, this bluff, if we start digging in, you're it's capital expenditure into AI, open AI, right? I mean, every big tech company is putting money into this non-public company called OpenAI, and it's called money laundering. Come on, like, honestly, like, we're shifting money somehow, and nobody knows what the hell's happening with OpenAI, how well it's doing or what. But we all know that they make deals. They make deals with these big giants, and everybody seems to be. It's like OpenAI becomes like a little fund for a few, where they're just putting money in there, and then from when, like, let's say the disaster hits, everybody will start picking up on, like, oh my god, this AI whole thing is like this whole capital expenditure on the AI is a big problem, and that's it. The money's gone, money is somewhere else now, and we know that OpenAI is now kind of controlling that money, helping the few. Beautiful, beautiful. Look, in normal world, it's called, like I said, it's called shady, it's called whatever you want to call it, but in those synonyms, um, and for that sometimes you can go to jail, apparently. So, but for bigger companies it doesn't matter. So it's justification because it's for the greater good. I don't know whose, but anyway. So yeah, Dow Jones Industrial Average hitting the all-time high. I think that the market is just looking for an opportunity to step in and to go in somewhere where there's some sort of value, and nobody wants to jump into tech right now, so they're seeking alternatives. And of course, Dow, with their big companies, which are utility companies, those are the ones that are attracting attention. Long story short, we overcame the previous all-time high. We created a new one, and yes, there we go. We're continuing to push higher. Look, I'll say it this way: if by any chance today we stay above the previous all-time high, I think that there is still room for some more upside. 49,000 looks quite interesting, quite attractive. However, I'm not going to rush into things. Certainly, I'm not going to, because there again, there are going to be more companies that are going to be coming out with problems like these, and although Dow is not exposed to tech that much, but it will drag the market lower if suddenly we see Nasdaq kind of collapsing. Speaking of the Nasdaq, if we're going to see this one kind of drifting nicely here to the downside, just because of this whole AI expenditure. Just a second, looking for Nasdaq to see what's happening right now on the. Come on. Right. So what's seeing right now? What's happening on the cash? And we can see it actually. Yesterday it closed. Yeah, it's currently around the same level where it ended yesterday. Because yesterday we had a great run. Actually, we had a push higher after hours as well, but then it kind of collapsed and it's now back in. It still remains in this little box here. So my problem is like, where are we going to break out? So although we can see this as a range, the prevailing trend is to the upside, so the greater chance for this one is to break out is to the upside. However, a confirmation break is still needed, so I'm not in a rush here. Yes, it could still break out higher, don't get me wrong, because maybe everybody will, because investors seem to have short memory, and everybody will forget about problems, because again, we had another company this morning, Broadcom, coming out and saying that they're delivered bad numbers. Where's that? Broadcom basically, their stock. Let's check out their stock fell. It's not seen here. We don't have the pre. I don't have the at 11 o'clock. I'll have the pre-market pricing here, but Broadcom is lower right now. No, it's lower below the 406. So yeah, it's currently at around what, 388 stock. Yep, so 388. We're somewhere around here. Basically, they have delivered bad numbers, and also they have a backlog of what was the word? What was the wording? There was a 73 billion backlog for AI products, but but again, the CEO keeps on saying that it's noted that this figure is a minimum and more orders are expected. So there's a backlog. Okay, so more orders are expected, but they have a huge backlog. So are they going to deliver on that? That's a question, and how quickly they can deliver on their on the backlog. So look, although maybe it's not a huge thing here yet, but these little things, they're adding up, and I think that we'll see bigger problems once the number one company, this one right here, will start coming out and saying that, oh guys, you know what, I think we have a problem. I think we're not expecting that much good stuff as we promised everybody. So but you look at the stock already. It's struggling to, if everything is that good and all these deals are made, the stock market is rallying, the stock market is at all-time highs, but the stock of NVIDIA is on the lower side, and this is where the issue actually is. We're actually looking at this from the technical perspective. You'll see that we are balancing just above the 100-day EMA. We're already below the 50, shown as the green line. Can we go all the way to 200-day EMA, which is not far from this 164, 65 level area? And if that's the case, then certainly there is a little bit of a problem, in my opinion. So look, long story short, for now, I'm watching this highlighted zone. It has been violated a few times, but I still like it, this 180 territory. So if we do fall and stay below the 180, I think that there could be issues going further. Actually, because I don't have the pre-market here, the cash, we're currently slightly pre-market right now. We're currently slightly below the 180 zone. If we continue to trade below the 180, I think there is a chance for NVIDIA to actually drop back down. So we'll keep a close eye on this. It is a developing story. Yes, it's not right now touching, NVIDIA, but again, if one starts showing cracks, then we start seeing problems in this overall sector, the AI sector, because yes, AI is important. Don't get me wrong; it's a good thing, great thing for humanity and everything. But um, at the moment, the problem is not maybe the AI itself; is the companies. This is what the problem is, and it's the same basically story as with the 90s, the dot-com, the end of the 90s, the dot-com bubble, right? The websites, did those disappear? No, on the contrary, they all floor, and they all cherished, and they're all blossomed, and they're all working, and even developed in a way we didn't expect them to do so, right? But it's the same story with AI. It will stay, it will continue, getting developed. But again, the whole hype, the whole this whole craziness, and how when everybody starts talking about this, like they are right now, like I said, it does resemble the dot-com bubble, where everybody was crazy about websites, those crazy valuations of companies. Speaking of valuations, whew, where are those valuations? Let me just, we had them open before. Company valuation. Where's that? Biggest, oof, just a second. Biggest companies by cap. There we go. Yes, there we go. So yeah, I mean, at the moment, yes, I agree. Okay, at the moment, you see that these valuations are crazy. I mean, NVIDIA, it seems like it wants to go for that 5 trillion valuation. Apple right now is stepping on the toes of NVIDIA. Look, it will, like I said, it will eventually reach at some point, but again, I don't know if it's going to be before a major correction or after, but certainly at the moment we're living through a period where it doesn't make much sense, But that's what I'm saying. That's why I will return to the same wording that I said. It is we live in a world of double standards all the time, right? So if you're very big, then it doesn't apply to you. So the rules do not apply to you, and you're unless somebody really wants to bring you down, like from the government side. Let's say if you became not very friendly to the government, and then they oh, you know what, yeah, we'll actually bring you down. So you always have to play along with the government in order for your company to continue living. And yes, you can grow and everything, but you will have to share, so you'll have to share with the government in one form or another. So yeah, at the moment these companies are playing along with the government, and we know because we see those leaders having lunches and dinners publicly in the White House. uh, so that's how it works. But and like I said, the rules do not apply to them. But if they want to justify that spending, that massive spending, then they can do it, and everybody's okay with that. Everybody's okay with that. So until it backfires, but then it's okay. Look, don't get me wrong. Then it's fine because we always can bail them out. We can always bail them out because they're way too big to fail. We've been there, done that, and I don't think that this is going to be the last story. Nasdaq. Let's have a look from the technical perspective. Yes, we're waiting for clearance through one of the sides here of this box. So let's see what's going to happen. Okay, fair enough. And for now, what I'm going to say is that look, I can consider the upside and the downside, but either way, I need a clearance through one of the sides here of this box. The German index DAX, there we go. We popped yesterday. We popped above the downside line. I talked about it, and great clearance, wonderful move here. And we also cleared the 24,384 zone. That's amazing. That's what we're doing today. So yeah, it's an interesting moment here right now. Let me just actually just. Yeah, okay. Sorry about that. I'm just still getting used to this new studio, the YouTube studio that they launched. I mean, it's a little bit inconvenient on one hand, but anyway, why do you have to make such a big screen here? Anyway, um, so yeah, we nicely popped here. We cleared, this is just showing the whole risk on environment right now that we're still in that. We're, pushing higher. Okay, great, wonderful. What can I say? For now, everything is looking quite nice here to the upside. We popped above the 24,384. And my next target is the current all-time high. Very simple. That's what I'm going to do. That's what I'm going to aim for. I'm not really going to invent here anything else. It's just, yeah, straightforward action here. So we'll see what we can get here, if we can get all the way here to this current all-time high. If we fail, if, for example, let's say, I'll give you an example. If we start hitting this little hurdle, the 24,600 zone, which is the inside swing low of the 9th of October. It's when we reach the all-time high. That's the low of that day. If we hit that area, and actually, let's aim for that one first. Let's not be too greedy, okay? And let's aim for this 24,600, and then we'll take it from there. We'll see if it holds. If it fails to push further north, then maybe there could be a little signal that, hey, maybe we're ready for a little bit of a correction back down. The FTSE. The FTSE is pushing nicely to the upside here. Beautiful move here, breaking this 9,744.45 zone. If we stay today above it, I'll go higher. The week, So, okay, something is honestly happening here. My, yeah, camera, I think my camera stopped. Let me just check. I think something is wrong with my camera. Let me just double check, ladies and gentlemen, because again, I just noticed that my camera is, yes, it's it has crashed. Okay. Oof. There we go, ladies and gentlemen. Sorry about that. Apologies. I think yeah, the camera has crashed a little bit, so hopefully you can hear me and see me well now. Look, coming back to the situation here with the weekly chart, and we're currently in positive territory. I think we'll stay in positive territory, but I'll apply the same logic as I applied on Nikkei and Shanghai Composite, especially on the Shanghai Composite. Look, we went for a new high, but we still stayed below the previous high of the high of previous week. The same story with the Nikkei, and the same I'll apply here on the FTSE 100. If we do stay above the high of the previous week, okay, we could go higher. But if we struggle, loss of internet. Okay. Right. Okay, something is happening here on my side. Yep. Okay. It's very, very interesting here. So, ladies and gentlemen, my internet keeps on crashing for some reason, and I hope you can hear me and see me well. This Friday, maybe the internet didn't like what I said about everything, so maybe that's why I'm crashing here, and that's why everything is slowing down. Most likely, like I said, it's somebody didn't like what I said. Okay. We'll see how everything is. I hope you can hear me and see me well, ladies and gentlemen. I hope everything is, kind of running still okay. We reconnected. Let me know in the comments if you can hear me and see me well. But yeah, I think, like I said, the internet did not like my commentary, most likely. Okay. Right, look, what can I say? Apologies for the little mess here that I have on the US dollar, but look, I'll just quickly explain. I mean, I can see the lines, and we probably are confused with all these lines, but basically the green ones. I kind of currently focus on the green ones because, look, I Anita, hi. Thank you very much. Thank you for confirming. I really appreciate that. So you can hear me and see me. Right, perfect. Like I said, it's just the. Thank you very much for confirming. Honestly, I really appreciate that. But yeah, it's an interesting moment that's happening. Anyway, look. Long story short, for now, like I said, just try to focus on the green lines. I know that it's way too many lines here, but the 50%, we did a retracement of a 50%, 98.30. That's the zone where we're getting a hold up right now. So my question is actually, can we see a further decline? If we do, then I will aim for the 61.8, very like standard, not really trying to invent here too much here, of anything. But if we do get a drop, like I said, below that 98.30, then yes, great, I'll go further south. But am I getting very bullish right now? No, because what I would like to see here is a push back above the 38.2, near the 98.80 zone. If we do climb back above the 98.80, I will consider a move higher. Very simple. I'm going to apply, like I said, this logic here on DXY. At the moment, yes, we had already retracement, but I think we did a nice 50%, so maybe a bit of a push back up here could be possible. Ladies and gentlemen, actually, you know what? Let's speed this up a little bit. I want to jump into commodities as well because, again, that's very important. But I'll quickly talk about Forex. So Forex, AUDUSD, clearing the upper side of this kind of downside or triangle pattern, but again, it's not a very attractive triangle because we have a very big gap here, and we're clearing this downside line, let's say. So my next target is the 0.6707, and then we will go from there. I'm not really gonna actually drag this one way too much to the upside. I'm just gonna aim for that, and then we'll take it from there. That's the highest point of September, so let's see what's going to happen here. Just a quick update here. AUDNZD, not much. Look, I'm not going to spend too much time talking about these pairs. I do like them, but you know what? Given the time, let's just have a quick look. Oh, AUDCH Chef, amazing. Look, I talked about this one. I love this pair. It cleared the upper side of the range where we were stuck in. We went higher, tested beautifully the 0.5372 territory, and now we reversed back down, and now we're holding still above this area. So, like this. If we do see a continuous hold up above the 0.5295, then yes, another push higher could be possible. But if we do fall below this hurdle, then great, more sellers here could join in. AUDJPY, our risk on, risk off monitor. Now, this one is kind of giving us a little bit of a mixed signal here. It's showing a little bit of weakness, especially yesterday, although the stock market was all fine, right? Apart from tech. And we're seeing this little retracement here, little move lower. Yes, we're seeing a correction back up today, but can it go back up? Can it clear this week's high? Well, let's not get our hopes yet, because also on the weekly chart it looks it still looks quite strong, but again, let's take everything with a pinch of salt. For now, I would say I'm cautiously bullish. I'm aiming for that 105 zone, but again, just very, very carefully. Let's jump into EURUSD very quickly. Beautiful move. Yes, the weakness of the dollar can be seen. Everything is fine here. We're pushing, look, I talked about this on Tuesday, and I said, keep your eyes on this barrier. This is 1.1650. Look, I warned you about this. I warned you about this barrier. So if we do climb back above it, I'm going to aim higher. I'm going to aim for this 1.1682 tick, and if that gets cleared, a forthcoming higher high will be confirmed. The next target here is the 1.1779. Almost we reached that, so I'm not gonna really rush into things. Maybe actually I should have focused more on this little territory here, this 1.176160 zone. I think this was maybe like the one-off jump here back in the 1st of October. The main kind of hold up happened around this 1.1760. Okay, maybe we can, I would say that, I was maybe way too ambitious aiming for the 1.1779, but still, still okay, we reached this area. So now from here, very simple. If we do clear this 1.1760, I will go higher. Simple as that. EURUSDJPY. Still pushing to the upside. So the yen is still on the weaker side, waiting for next week. The BOJ is coming out next week, so it'll wrap up the big central bank decisions for this year. Because next, well, I'll pick up in that in a bit as well. At the end of this, actually, instrument. At the end of everything, I will pick up on what's happening next week, basically. So what you need to keep an eye on. So. Yeah, EUROJPY, that's the case. I think that there could still be some more upside. Let's see, but again, I'm not really touching this. I'm just observing it. I like to see that. Look at this one, but am I getting very bullish or something? No, I'm just looking at it because at some point this will have to reverse back down, but not now. GBPUSD, beautiful move. Ooh, pin bar on a daily. Okay. But let's see if it's gonna, actually reverse back down because again, if DXY shows willingness to actually go back up here, if this 50% is gonna hold, and we're gonna see that jump back above the 98.80, I will consider a move lower on GBPUSD, to be honest. Yep. The preferred scenario would be from here somewhere, from this 1.3294-ish zone, 90, kind of something like that. This whole area I will leave just for the market to settle itself. Also, I do like this little hurdle, actually, this 1.3386, and it's providing good resistance. So if we hold below this, then maybe we could see a little bit of a drift back down. So that's why my upside scenario for now would be something like this. If we do push and stay above the 1.3386, then yes, great, I will consider a further move north, and because that's basically the high of last week. So again, applying on the weekly, I do like to look at these charts. I do like to look at these weekly charts, monthly charts. So for now, the way we can position ourselves is like, a lot of instruments today are showing me that they're clearing the high of last week, but somehow they are struggling to remain above that. So we saw with, like I said, Nikkei and Shanghai. We were seeing it potentially with the FTSE. It's kind of going into the Forex world. So let's see what's going to happen today. If we're going to stay below the high of last week on the British pound against the US dollar, then maybe, like I said, maybe we're maybe investors are carefully preparing for next week's BOE decision, interest rate decision. GBPJPY, okay, this one's still somewhat on the positive side because look, we're holding above this hurdle. I talked about this yesterday on Wednesday. One of the viewers asked me about GBPJPY, and great, look, I mean, I said I know that the person is short, which is fine, but needs to be very careful because again, what could happen is like the annoying bit could happen that although this looks quite shortable, what could happen because we're going into this BOJ meeting, and what could happen, we could see like a rally before the meeting, it could spike higher, we could actually see a spike higher, and then at the same time, the same day maybe, or the same week, we could see a reversal, strong reversal back down, and then we could see this yen buying coming in. So we'll see how it plays out. Going into USDCAD, ladies and gentlemen, very quickly, this continues to strengthen. Look at this animal here, Canadian dollar, but I think we could be approaching a very interesting area of support right here, near the 1.3722 zone-ish, something like that, or 2022, something like that, around here. Maybe it's gonna be a little bit higher, who knows? But again, I think that we still have this worked out. First of all, I have to say that I talked about this on Wednesday. I talked about this with you. I said, look, we're reversing back up here. If this holds, this 1.3890 zone holds, then we could see a nice decline. Tick, tick. So now what I'm gonna do, actually, I'm gonna consider this. The reason for this is why that not only the fundamental side is actually playing out interestingly, but also the technical part. Look, I love one of these patterns here that happen, and they don't tend to let me down. I mean, they're not bulletproof, don't get me wrong, but they tend to work out nicely. So whenever we have a strong decline and then a gradual decline, it tends to reverse to the upside. So if that's the case, then maybe the whole DXY story could be, you know, somehow working out to the upside. We'll see. But again, like at the moment, I'm still leaning towards the downside. But hey, we're approaching a key area of support, and if this holds, maybe, like I said, a nice reversal back up could be possible. USDJPY, yes, again, I think that this is going to just bounce around here for now, and we'll have to wait for next week to see what's going to happen here. So I don't really have strong opinions. The only thing what I really want to do here is I want to get rid of everything, and I think I'm going to leave it as it is. And I'm not really going to touch it. Don't get me wrong. I'm not going to really touch it. I'm going to leave it for next week. At the moment, I want to see how it will play out going into next week. How it's going to play out today. And now this one I do like. I do like USDCHF. Now this pair has been an interesting one. It held nicely near this downside line here, and it was, you know, I was hoping to see maybe some sort of a push higher, maybe going for the higher high, but it was going for, you know, higher lows here. But we actually cleared this 0.7990 zone, and we dropped lower. But not everything is lost for the bulls yet, because still, if you look at it from this perspective, then we still have some room to the upside. Look, don't get me wrong, we have room for the downside as well, but in that case, I'm considering something like this. Let's see if that's going to be the case. Let's see if it's going to work out, but certainly there is a potential for this one. And let's jump into the commodity world very quickly. Gold rallying, looking good here. So yesterday I did a little video. If you haven't seen it, basically it was here in this section here in the video section. It was basically my top news. I did silver, the new gold. Well, I mean, this is where I'll show you what I'll just mute it here very quickly. So I was talking about this one, and I was warning you about this little barrier here, because we were forming something of an ascending triangle pattern. But I said that we need to wait for the confirmation break here, and there we go. We got the break. Where's that? There we go. We got the break. We are now I'm now aiming for that all-time high, to be honest. But you know, I said that is silver the new gold, but look, I think gold got offended on this term, and then, you know, we saw that push higher here. Long story short, I do believe that silver did attract a lot of attention, and still is. And you know, quickly jumping into silver, this to me is not normal. I mean, looking at this monthly chart, come on, it's just like crazy. And 1980, when we had the first big move like that, 2011, we had another crazy volatile move like that, and now we're in 2025. It's a historic moment. Will it go down? Yes, eventually. It cannot really go like this all the time. It's just, you know, somebody will decide to lock in those profits. At the moment, we're going for you know, we're going here for this maybe $65 mark, because look, I keep on saying that I can't remember who exactly gave a price target of $65 for silver. Was it JP Morgan or Morgan Stanley? Let me just Google it or something, you know. So silver price target Morgan Stanley. Let's get the Morgan Stanley. No, then maybe it's gonna be JP Morgan. Yeah. Okay. News. Right. Okay. So there are forecasts, and okay, so maybe they're actually somebody's saying 100. 100 per ounce. I think, is it doable? Yes, it is. Everything is possible nowadays, honestly. And yeah, I think there is logic. You know, we could see 100, but maybe the 100 is a little bit overdoing it a little bit. However, now we always need to look at actually not, we don't need to look at numbers like monetary value. We actually need to look at percentage value. This is what I keep on saying. So look, let's have a look. What can we, if we need to be close to how we rallied here, for example, look, I mean, at one point here, back in 1980, we rallied like over 1,000%, right? Back in 2011, here we rallied around 500%. From this drop to all the way to this drop, we're rallying 250. So in proportion wise, if we're cutting it in half, then I think we already reached it. So for example, so let's say, what I mean is by that, let's say here we rallied around 1,000%. Okay, here we rallied 500. So we cut in half the 1980 rally. And if we cut in half the 2011 rally, then we'll see that silver is basically now we're already kind of near this 250 point here percent, so if we're going in these proportions, then the $65 mark looks interesting. And I would say just be careful right now. Yes, like I said, we're going for, it seems like we're going to go for a new all-time high today. I think the $65 maybe could be reached today. Let's see, we're at around 64 right now. This is going, like I said, this is just crazy. Gold is rallying as well. But for gold, I'm really interested. Are we actually going to hit that all-time high this year again? That would be spectacular. And look at this. I mean, this has been a parabolic move as well for gold. Gold has experienced such moves as well. 1980 here, 2011, and look at this. This is another big crazy move that we're seeing. Gold is important. Don't get me wrong. Gold is attractive. Here in 1980, 700%. From this low to this high, we had 600%. And right now, from, let's say, okay, we'll go from this low to this here, 170%. So I think maybe actually we need to do maybe from here, 300, yeah, ish, kind of. Look, I don't want to say anything, but in general, that has been a strong move already. So quite a, if we measure the magnitude here, this is just way too much, maybe way too much. But anyway, look, certainly we'll keep an eye on gold. Right now, I'm gonna, like I said, I want to consider a retest of the all-time high, but I don't want to rush into things yet, because right now silver, like I said, is just exploding, higher, and as we speak, I think it's going to overcome the yesterday's high here, which is around 64.30. I think it's quite doable to 65 today. So let's see what's going to happen. Platinum very quickly, and actually I need to wrap up here because I think I've overextended my my time, but you know what? It is a big. There's a lot of happening. There's a lot of happening. Like, so we'll jump into platinum very quickly. This one's pushing higher as well. Palladium pushing higher, but they're a little bit on the modest side. Copper to the moon, and not back, basically. So I think that, look, with copper, I said to you in my previous sessions that I'm aiming for this 1,150 zone, and then we'll take it from there. Now jumping into soybeans. These look a little bit bearish, to be honest. I'm leaning a little bit more to the downside. Let's see if we can clear this area. This area is roughly between the 10.7783 zone. Jumping into oil. Now, oil is attractive. Now, look, with oil is, again, it cannot really get rid of this this upside line. It continues to respect it. We're knocking on the door of the 57.10 zone. We were failing to break below it. So for now, long story short, I would say that I would prefer to wait this one out, because again, we're seeing that we're living in the world where one country is okay to attack another country, but another country is not okay to attack another country. So it's like we're gonna see what the U.S. does with Venezuela, and it seems like the most idiotic thing is that everybody's fine with that. So it's okay. It's like, so we're blaming one country that it's invading another country, but for them it's okay. Because like I said, the U.S. has always had a better marketing team, so because it's for the greater good, right? It's no, it's for the not for the greater good. It's for the greater Chevron. It's for the greater Exxon. Um, if you know what I'm talking about. Anyway, so for now, like I said, is keep an eye on that story. If we do see boots in the ground, then we could see oil actually spiking higher here. So keep that in mind. Natural gas drifted lower. I talked about this yesterday. I said, and sorry, yeah, actually yesterday in my commodity video. In this one, I talked about natural gas. We were still hanging around above this upside line. So I said, look, I'm leaning towards the downside. I'm aiming for this upside line. If that gets cleared, I'm going to aim lower, and we'll go from there. And very quickly, let me just wrap up everything with the cryptos. Bitcoin continues to struggle with that 93,000 zone, and it seems like we're gonna just drag on, and we're gonna just move sideways until we hit this downside line, hit it, and then maybe fail to break it and then move back down. It's like one of those scenarios that kind of repeats itself. So, but if you're looking for some lower levels, I think that just wait for a break of this upside line here, taken from the low of the 21st of November. Yes, it's a little bit on the tentative side, but nevertheless, keep your eyes on it. Bitcoin Cash, it's messy here, and you know what I really want to do? I want to remove everything and start fresh. So in terms, I like this crypto, I really do. And we had a nice good move here. This is the highest point of December, 607. So if you're looking for some higher levels, then just basically wait for a clearance of that area. If we get a clearance of the 607, good, I'll go higher. But if we struggle and we start seeing, let's say, a drop below this upside line, then, well, I would say this way that I will consider, lower levels, but I would prefer maybe to see a drop somewhere below this zone. I mean, it's not a specific level because again, we don't have a specific level here, but I like this area and 550 zone roughly, right? So if we do clear this zone, then great, wonderful. More sellers are okay to join in potentially. But again, everything comes with an asterisk. Everything comes, with the little terms and conditions. But at least we can start considering lower levels here. Ripple, okay, still flirting with that psychological 2 level, but that's not the breakout point for me. My preferred scenario is a drop below the 1.1990 zone. If we can get that move, I'll go lower. Ethereum is still holding on. That's actually quite looking better here. Maybe I would say it broke the downside line. It pushed above the 3,244 zone, so we're kind of bang on it. And I would prefer actually to maybe even actually wait for a push above all my EMAs here on the daily chart. If we can get that move, great, I'll go higher. Litecoin, we're in a box. I like it. I really do. I like this crypto, but we're in a box. And yesterday I did a little piece on Litecoin for our VIP clients, and basically I said that look, we were hanging around here, but what I said is like if this is a key area of support. Yes, once we had a violation here, but very quick one, and but the 79.8889 zone is something of an interesting level. But am I getting very bullish? No, because I need a pop above the 87.83 zone. If I can get that, great, I'll go to the upside. Dogecoin, also with this one, let me get rid of everything, and let me just little kind of right now focus just on this little area right here, and I think that this is quite logical. So I think that this is worth mentioning, and I think this is worth watching. And actually, maybe it's not even a box. By the looking at it right now, maybe it's not even a box. Maybe it's just going to be something of a descending triangle pattern, something like that, basically. So if, according to all the tier rules, then these such patterns tend to break to the downside. However, should we just blindly follow that? No, because why? Because I've seen this happening several times where it kind of breaks up in the other direction, and kind of everybody gets screwed in a way. So yeah, just wait for the confirmation break. Honestly, it's getting into a squeeze, that's fine, but it's becoming even just more and more interesting. So let's wait and see which way this one's going to break out to, and then we will consider the next short-term directional move. Polkadot, this one is loving that 2 level, and it's also like near this 2.04 area. So yeah, this whole zone is quite an interesting one actually. And now Polkadot is in a somewhat of a box here, and I think we need to keep an eye on it. I think it's a good one. It's an interesting one. So let's see if this is gonna, excuse me, play out nicely. 2.39 is the one that I'm watching here. I'm gonna change my analysis a little bit here because this, I think, it's a better area. 2.39 is the one to watch for the upside. If we can clear that, great. I'll go to the upside. And very quickly on Tron, this one is drifting lower, and we're near key support, near the 0.2770 zone here. What can I say? For now, it seems like he wants to go lower, but I don't want to rush into things, okay? Because, look, we are drifting lower, yes, great, but if this area right now, and you know what, actually, let me, yeah, actually, you know what, I'm going to keep it. So if this whole area, and let me just highlight what I'm talking about, if this area holds, I think that this could form a nice little kind of higher low, and from here we could rebound back up. So in a way, you could see something like this. So just be careful right now. Yes, I will get bear. That's why I'm going to get bearish from this area, from the 0.2709 or something like that. That's the lowest point of November. If we could clear the lowest point of November, then yes, great. I'm going to go further south. But at the moment, I'm watching this area very carefully. If it holds, we're going into the weekend. If it holds, maybe, you know, maybe the market will love it and we'll see it push back up. But again, I'm not in a rush. That's why there's a lot of ifs. I'm not, like I said, trying to pick up the lowest you know, level before it reverses back up. No, because it's difficult. You know, just wait for it. Let it settle down here. Let's see what's going to happen, and then maybe we can approach it. And anyway, ladies and gentlemen, very quickly on what's happening next week, what to keep an eye on. So, look, in general, we have a lot of data, but you know what? I think the main focus will fall on the US NFPs, the ADP employment change as well, coming out, the weekly one, but the US NFPs are going to be coming out on the 16th of December, and keep your eyes on that. Then on Wednesday, we'll get the, where's that? On Wednesday, we'll get some data here as well. Some few minor things, and to be honest, European inflation, IFO business climate, minor things, UK's inflation. So a lot of that data, which is important if you're trading Euro or GBP. But Thursday is going to be the BOE interest rate decision. We're expecting a rate cut. In general, we're going to get the BOE, we're going to get the ECB, and we're going to get the Bank of Japan on Friday. So on Thursday, it's the BOE and the ECB. There we go. There we go right here. And on Friday, we're going to get the Bank of Japan interest rate decision. Now, what's interesting in all this is that all three banks are going to go all three different directions. The BOE to the downside in terms of a cut, right? The ECB, flat. It's not going to do anything. The BOJ is expected, although we don't have an expectation here right now, but they are expected to hike by 25 basis points. Again, I don't know if Sanae Takaichi will allow that or something, or what they're going to do, but for now, that's the game plan. Let's see what's going to happen. And that's why I'm saying that, you know, next week, it will be quite interesting to watch Euro, GBP, Euro, the British pound, and the Japanese yen. Ladies and gentlemen, I'll have to wrap it up here. I overextended my welcome, in my opinion. So, ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. I can see that my camera again stopped working. So, let me just see what I can do here. Again, maybe for the final, for the final goodbye, I can switch on my camera because, again, like I said, it just stopped working. There we go, ladies and gentlemen. So, yeah, one of those days. Ladies and gentlemen, thank you. I hope this week was a good one for you. I hope you all have a fantastic weekend. Let's meet on Monday. We'll have a lot to talk about, but yeah, thank you very much to everybody. And as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you on Monday. Bye for now.